Economics is a strange discipline. Few people understand it, but everyone feels the effects of it. When you go to the gas station or when you visit the local grocer, chances are you have sensed something is off, most notably the prices. Things are getting more expensive globally. Your fuel, your cooking oil, your vegetables, every commodity is becoming more expensive. The question is why? One reason is the war in Ukraine. Global supply chains are under threat. And when that happens, prices go up. But that's not the only reason. You see, the global economy is at an inflection point. People are vaccinated, Wuhan virus cases are down, lockdowns have disappeared. So the world is looking at the next phase, the phase of economic recovery. But before that, they have to deal with the past, the period between 2020, and now. What was the highlight of that period? Massive spending. Every country was announcing stimulus packages. And they had two objectives. One, cover the pandemic-related expenditure like masks, PPE kits, vaccines, and all sorts of things. And two, keep the economy afloat. The private sector stopped investing during the pandemic years, so someone had to keep spending money, and that someone was the government. How much money are we talking about? The G7 alone spent $8 trillion. India announced packages worth $300 billion. All of this money flooded into our economy. At that time, it was needed because money was not the priority, saving lives was. But in economics, like in life, actions have consequences. What happens when you flood the economy with money, when you spend too much? Prices begin to rise. In other words, inflation. That's what happens. And that's what's happening right now. Take a look at this table. In Argentina, inflation is at 52%. In Brazil, 11%. Canada, 5.7%, the highest in 31 years. In France, it is 5.1%, their highest level since December 1985. India too is feeling the pinch. Inflation here is at 6.95%, the highest level since 2020. In Australia, it is 5.1%, which is the worst level since the year 2001. Long story short, prices are rising in every continent, and the result is this. Central banks are stepping in to raise interest rates. India did that today. The Reserve Bank of India hiked interest rates by 40 basis points. The new lending rate is 4.4%. It was the first policy hike in almost 4 years. What does this mean for you? In simple words, it means less money to spend. When interest rates rise, loans become more expensive. Your monthly payments go up, and this causes a chain reaction. People will spend less, and gradually inflation will ease. India is not the only country doing this. Australia did the same on Tuesday. The US Federal Reserve is planning to do it tonight. Europe, Canada, England, all of these central banks are planning to hike interest rates, basically slow down spending. By how much? The G7 is shrinking its balance sheet by $410 billion. To put that number in perspective, last year they added 2.8 trillion. 2.8 trillion. This year they're slashing $410 billion. It is a complete turnaround for the world economy. The last 2 years were about mindless spending. The next 2 or more could be about tight controls. Which brings us to the big question. What should you be doing with your money? Should you spend it, save it, or invest it? What's the best option right now? Let's focus on India for the moment. Sensex dropped 1,300 points today. Nifty fell 2%. Is the worst over? Or could the markets fall even more? Depends on what the US Federal Reserve does. Foreign investors are waiting for their decision, the US Federal Reserve, and rumor is the Fed will hike interest rates by 50 basis points, their largest hike since the year 2000. And if that happens, foreign investors will flock to America. Where will they flock from? Possibly Asian markets. Investors could pull out of Asian markets and dump their money in the US, and if that happens, the markets may fall further. So hold off on any immediate stock buys. That's what experts say. Where does all of this leave our economic recovery then? In a limbo. Because things are hard to predict right now. Job openings in the US are at a record high. Eurozone unemployment hit a historic low. Yet growth is sluggish. America's GDP contracted 1.4% in the last quarter. 2 quarters of negative growth is recession. That's how precarious things are. which explains why the central banks have finally intervened. Some experts say it's already too late, that spending should have been tightened earlier. Others say better late than never. Either way, the top priority seems to be curbing inflation right now to control spending. And frankly, it makes sense. Just look at what's happening in Sri Lanka. Mindless expenditure has left them broke. So what we need at the moment is fiscal prudence. Imagine your economy was a car. For the last 2 years, this car has been running non-stop, and that too at top speed. So now it's time to give it a rest. Maybe open the hood and let the engine cool off. As for economic growth, it can be handled in the long run. Just one question: what will that long run look like? Russia's war is going nowhere. China's lockdowns are getting worse. If only there was normalcy, the economy could recover. But right now, some leaders seem to be following the words of John Keynes. In the long run, we're all dead. WION is now available in your country. Download the app now and get all the news on the move.